All right, everyone. I know it's been a while, but I'm back, and I'm sorry for the long absence. There's been a lot of things happening in the background, new websites up, and also have been focused primarily on posting ideas more on TradingView. So if you haven't checked either of those out, the website with the blog and also the TradingView with setups, please do. My setups are also posted on Facebook and also on Instagram, where we have quite the community. So what I want to do now is I want to start posting videos frequently. And what I want to do is every week or weekend, most likely the weekend, I want to speak about what happened in the past week, just very briefly, and what we can look forward for the week ahead. So it is a look for a week ahead, and essentially you're going to see what I do every weekend to prepare for the coming week and looking for setups that meet our criteria. So, I mean, the big story, and I'm sure you've probably heard about it, is the coronavirus in China. That was the big story for last week, putting pressure on world equity markets risk, although I would say I think there's another reason for that, and we'll speak about that when we get to the chart. But it was actually quite the hectic week last week. On Thursday, Britain finally left the EU, so the Brexit deadline was met by Boris Johnson. And on Wednesday, we had the big, Fed meeting, the FOMC meeting, where interest rates were kept. Fed futures were giving us about an 88% chance of rates remaining the same, and a 12% chance of a rate hike for some reason. But Powell spoke about meeting inflation targets and how targets were close to 2%. I mean, of course, this is all Fed talk. You know what the central banks do. And it's very famous, going back to Greenspan, Fed talk. They know their words can change markets, so they have to be very careful for what they say. And again, their job is not to upset the market. Obviously, Powell saw the 88% chance of no hike, and anything that would not meet that criteria would have made the market move and make it move very volatile. So there's an argument, does the Fed care about the markets? I argue that they actually are watching the markets, and they make their decisions based on that. The big event, though, or the big sort of takeaway from this conference was more to do with the repo situation, and I've posted a lot of blogs on repo and how you should watch that, because it shows that the Fed is losing control maybe of short-term interest rates. Well, rather not losing control, but there is some sort of issue with the plumbing, as a lot of the financial media heads like to say. There's something wrong. There might be a bank that needs liquidity, but all we know is that there's something wrong. And Fed Chair Powell mentioned how, yes, the balance sheet has actually increased, technically, right? And you remember, this is not QE, so we're not supposed to be on QE or quantitative easing. And he said that the repo will start to taper come end of April. So the Fed may have placed themselves in a trap here, because there are a lot of people much more smarter and much more wealthier than me that think the Fed will have to do repo indefinitely. So they may have put themselves in a trap here. Again, if you read a lot of my blogs, I do believe there is a confidence crisis coming, and this is just something that happens in cycles. Human history is cycles of hard money and soft money, and it seems like this soft money cycle is ending, although I think they can try to prolong it with digital currency, and that is what we are seeing. So let's look at the news calendar for the week ahead quickly. We have Chinese data coming out on February 2nd, so on Sunday. No, it is the first week of February, so on Friday, well, you'll see what comes up on Friday. We have manufacturing PMI in January. We have the RBA interest rate decision with the Royal Bank of Australia. They're expected to keep rates stable at 0.75%. We also have Kiwi, or New Zealand, employment data coming out on Tuesday. What do we have on Wednesday? We have non-manufacturing PMI on Wednesday. We have a speech by the governor, and the monetary policy statement will be released for Australia. So this is the statement from the rate cut. And then on Friday, of course, the first week of the month, of course, we have the US employment data, NFP. So it's always a crazy week, I guess, but it seems NFP and employment is sort of becoming a non-event now, because even when jobs are doing well, no one is really expecting interest rates to go up. Well, actually, I take that back, because there was a 12% chance of a rate hike. But I think a lot of people that know about the actual financial system know that the Fed won't really be hiking rates anytime soon. And of course, we even have the Canadian employment data. So this will be interesting to watch, because a lot of people are expecting Canadian, the Bank of Canada to cut rates as well. And I have been saying this for quite some time. I think the best trade right now is shorting the Canadian dollar and going long Canadian bonds, because I believe there will be a rate cut that no one is really looking at. So quickly, let's just recap some of the trades that I took last week. One was the Euro New Zealand. We got in at this break here, and you can see here again, same criteria, very long, prolonged trend, and then signs of a reversal. Euro New Zealand, again, talked about this on my social media and also on, I believe, my trading view. I know this one, Euro Swedish Krona, was on the trading view idea. Again, nice prolonged downtrend, head and shoulder, just classic patterns that keep repeating themselves, and that's all our job is, to look for these patterns and just take them, because all markets move the same way. And finally, New Zealand Kiwi, the New Zealand Japanese yen, so the Kiwi yen, on the daily, we had this nice double top, big sort of support / flip zone we were watching. Yes, Sunday open, we did have a gap down, but again, a gap is generally a very bearish sign. Of course, if the gap was filled, that's going the other way. But this was also a nice trade, and a lot of the yen pairs are very similar to this approach, but all of them seem quite extended right now. But let's take a look quickly at the equities, because this is also an idea that I talked about on my most recent blog post and also on TradingView. But we were watching this nice setup here, double top, a range, whatever you want to call it. But all it's showing us is that there's an exhaustion of a trend. The trend that has, is composed of swings, higher lows, higher highs, higher lows, higher highs, is beginning to taper or exhaust. We had this big impulse break, and I talked about this on my media platforms on Friday. And look what happened. And again, folks, this is a 4-hour chart, and we were waiting for the first lower high. Again, this is just simple market structure. Markets all move the same ways, and they're composed of the same ways, and that's what we are trying to stamp into your head, right? That basically market structure is what you want to follow, and all markets move the same ways with swings. I know I always say this in all my videos, but this is now our first lower high that we are playing with this break here, and I think we are sort of getting closer to a big support zone down here. But generally, we see two swings, so I wouldn't be surprised if we see one more swing, maybe fall down to this the 3180 zone right down here. I want to show you guys something very interesting here on the weekly chart. As you guys know, this was the fib that we talked about way back in the day on this move here on the weekly, and you can see here that we almost hit 3350. We did reverse around 3340. A lot of other big macro analysts are now thinking that this is the top of the equity markets. I don't think I really agree with that, because there's nowhere to go for yield except the equity markets, and we will talk about the bond market just shortly. I just want to show you a couple more setups here. Again, so this is the Dow Jones. Nice sort of head and shoulders here, and it looks like we've made our first lower high. So you can see here, higher low, higher high going up, and we've had this break and we created a pattern. So this is something that we're watching for next week. The Russell 2000 as well, maybe not the cleanest pattern, but you can sort of see this is called a lower bounce, where price hit this flip / support zone. We had this big bounce and this break, so I do like what we are seeing here on the Russell 2000. And here's a very beautiful pattern on the Nikkei, nice topping, double top, head and shoulder, whatever you want to call it, pattern. But it's showing you that the trend is exhausting, and we expect now a cycle of lower highs and lower lows. The European markets were very similar. The German DAX is also one that we talked about for quite some time, at a very big zone, previous all-time highs, and making a nice daily pattern here. We took this on the 4-hour actually, but let's focus on the daily. Perhaps if we are lucky, we will see some sort of lower bounce, which we'll probably see in some of these equity markets before a continuation. But one big thing I want to talk about is the China 50. So of course this is the overseas market, but the Chinese markets have been closed due to the Lunar New Year, and they're reopening on Monday. So yeah, it might be pretty crazy. Let's just say that the People's Bank of China will be quite busy that day. Will we see the similar situation like we did see in 2014, where the markets in China were collapsing very quickly, that the People's Bank actually had to suspend market trading, and they did it twice one day, so they shut the entire market down. But people are expecting a large wave of sell-off when the Chinese markets open. And since Asia opens before North America, will that cause a lead? Will that lead Western equities to also continue the fall? So we shall wait and see. Let's look at the Canadian markets. Again, Canada also all-time highs, and we have created what could be our first lower high here, although there's not really any sort of pattern, no head and shoulder, no double top. So it's not really a market I would like to trade compared to, say, this is the Australian market, nice head and shoulder pattern here, retest of that flip zone break, created our first lower high with this break. And these are the type of charts we like. Very beautiful, nice trend that's well defined, and then signs of an exhaustion with some sort of pattern. And these are, again, all markets move the same ways, and these are the setups that we want to look for. A quick talk on gold. If you follow my work, I'm a big gold bug. I was very excited when gold broke this zone here, because this is, again, another way markets move: uptrend, downtrend. We are ranging for 7 years. We had this break, and for this to be a trend, we expect multiple swings, in this case higher lows, and we've only created our first higher low right here, and we expect a second higher low, just according to basic market structure. We are bullish on gold as long as we remain above this 1459, 1460 level here. And I dare say, but we might be testing the 1780, 1800 zone, but eventually we will break into all-time highs, and I think that's going to create a mania in the junior miners and also, well, the other mining companies in general. But let's look at bonds, because I think gold will get a nice bid due to what's happening in the risk-off assets. So this is the 10-year yield in the States, yielding 1.50. This is very important because this is the rate that determines like the mortgage rates, loans, etc. in the US. And you can see here we're up at 16% in the 80s, and we are at big low levels here. But this is the weekly chart, and I want to show you we've been here in 2012, in 2016, and it looks like we will be testing that now. So as a technical guy, you're expecting we will start seeing a rise in interest rates maybe in a couple of months' time. But if you look at what the Fed and other central banks are doing, they can still cut rates, and it looks like interest rates are still going higher, but lower. And remember, the 10-year yield and bonds are inverse. So if the yield is down, the bond market is up. So you're in a situation where bonds are trading at the highest they've ever been, or at pretty substantial levels. You have stocks that are trading at substantial levels as well. if you're a fund that follows risk allocation or asset allocation, and you want to sell stocks when they're overvalued to go into bonds and vice versa, are you going to jump into bonds that are trading at higher levels as a risk-off investment to get out of stocks that are also in high levels? So it's very crazy, environment. I still think people will run into bonds, because if you still believe central banks are going to be cutting, your bonds are going to be worth something. But again, now you're trading bonds not for the yield of 1.50 or less than 2%, but really just to trade it to another greater fool, I guess. And even people like Ray Dalio have said this, but in this type of environment, there might be a paradigm shift where it makes no sense to own bonds. And hey, gold looks quite attractive. If you look at what the Europeans and the Japanese and the Swiss have done, their central banks have literally just killed their bond markets, where they're the only ones at the auctions to buy negative yielding debt. And you're hearing things about negative interest rates in the States. If there is a downturn and you generally cut 300 to 400 basis points, while the States are at 1.75. Look at countries like Britain, that's at 0.50. It's very unlikely that they'll be able to hike rates up to 4% before the next downturn. So the central banks are, sort of trapped, and negative rates, I'm not saying it's coming anytime soon, but it's something definitely to consider. Copper, again, this is sort of seen as the China play, with China sort of slowing down due to the coronavirus, and that will actually seep into oil when we talk about oil. Big daily level here, or weekly level as well on copper. So let's see how price reacts here. Oil, of course, everyone has been watching this. We're at the bottom of a big sort of range level. I mean, you can even drive this down lower. The reason why I chose that is because, of course, the secret trick of the book, or trade in the industry, use your line charts to find areas where price has bounced up and above many times, and then that is the zone that you're working with. And you can see here we had a pretty strong daily close here. A lot of people were focused on the wick here, long sort of hammer candle, doji candle. But again, folks, these wicks do not mean anything until the subsequent candle. So the second candle is really what determines the strength of the doji or the hammer or whatever. And you can see here we still sold off. So I am watching oil, both crude and Brent crude, and West Texas. Very interesting levels. And I do believe that this is what has caused the stock market to fall a bit more. A lot of people are now factoring in the fact that, with the coronavirus in China, curfews, cities are basically stopped, that you have to calculate oil demand in the future. There's not going to be much oil demand, right now or currently in China, because no one's really allowed to drive around. So very interesting, to watch this level, and a lot of people have their eyes on that level for oil. I want to talk here quickly on the agricultural, the most traded agriculture futures or instrument, and that's wheat. Nice head and shoulder type pattern. So again, very simple, very basic pattern that we look for, and is a pattern that keeps repeating itself. We had this nice break, retest, and it looks like we have made our first lower high here. So I do really like wheat. This was a trade that I did have, but then I shut on Friday because I just don't like to hold positions over the weekend. The dollar had quite the drop here. Some are arguing, sort of head and shoulder double top type pattern here. Very nice trend. Very overextended move here. So if we are looking for a continuation, we'd like to see perhaps a move up to create some sort of lower high before we continue lower. And there's a big sort of support / demand zone right here at 97, let's call it, which I think will be very important for the dollar. So yeah, a very big drop down here on the dollar. Not too many major pairs caught my attention this week. A lot of them are sort of still in flux. Not really giving us patterns, but of course this will be posted on my trading view if the setups start to present themselves. Aussie New Zealand dollar is also another one that we've been looking at on the trading view and also on other social media platforms. Very big support zone here on the daily. You know, what we were looking for was a double bottom here, maybe making into a head and shoulder before we break out here around the 104.70 level. I mean, this could take a couple of weeks, but let's go down on the 4 hour, and you can see here price is still relatively holding well here. No pattern though, very choppy price action, but you can make an argument that if we do break above 103.75, perhaps we can see or take an early trade or an early entry before adding to our positions with this eventual break of 104.72. Probably the best looking setup for this week is the euro yen, and it's going to be interesting to see what the yen does because it still is that safe haven currency, but very big zone here, very big flip / support zone that we have touched after a very extended downtrend. We are beginning to range or have made a double bottom here. Very beautiful setup, even a gap that's here that hasn't really been filled yet. So if we do break and close above this 120.40 level, we are closing a gap and also closing and breaking above a nice pattern. So this is a very beautiful setup that I am watching. On the other bullish yen pair would be probably the Swiss franc and the Japanese yen. You can argue here, nice head and shoulder pattern that's forming, and we have hit nice flip zone. Maybe not the best flip zone, but I do like the extended move down here, the nice head and shoulder. And again, folks, trading is just putting all these probabilities or confluences together to try to increase your probability. And if I had to take my pick, I think the euro yen is much more of a superior setup than the Swiss franc. The pound yen, you know, it's one that we are watching on the daily and have been watching for quite some time. Still hasn't given us the break here, but you can see here price is very it's being handled and kept under this 144.50 level here, and it just can't get any more momentum or strength after this nice big uptrend move. So we are watching this floor here at 140.13. Let's see what happens off a break here, but yeah, it's really been doing nothing since the beginning of January. Euro New Zealand, we already spoke about this as one of our trades for last week, and technically, again, just simple market trends. We have not yet made our first higher low yet, so we may possibly see a swing. I'm not sure, you know, how far or how deep this can go, but we were lucky with this nice big pop. Generally, markets trends make higher lows and higher highs, and we've yet to make our first higher low yet. So this could be a trade that you can watch for a second entry on a trend that's already moving, but ideally we like to look for trends that are just about to begin, like we did on the euro yen. So, you know, that's more of a continuation play. And finally, New Zealand Canadian dollar on the daily. Nice sort of nice pattern here, very big flip zone, and you can see a bit of a head and shoulder pattern here after a nice higher low, higher high swing here, and you could see that we are sort of hitting a big demand zone here, but I would like to see maybe one more swing and a retest before we move down to this 84.70 zone here. I said this was going to be the last pair, but let's look at Bitcoin, because I know a lot of people like to talk about Bitcoin. So this is the weekly fib that we have been using for quite some time. You can see here how well Bitcoin has adhered to these levels, and look where we are at. We are also at one of these fib zones, but more importantly, a very important resistance zone or flip zone that you can see here has held many times. So it will be interesting to see how Bitcoin reacts here at the 9,500 level. We have already had we've already had multiple swings here, but this is a level a lot of people are watching, and you can see why. Very important level here on Bitcoin. And you know, the 4 hour for it is showing sort of a different story. Nothing really happening here. Maybe you can see some sort of topping pattern, but it's not really something I trade very much. But I do know that a lot of people trade Bitcoin, and this is just a very important level on Bitcoin. So if you are a Bitcoin trader, watch this level. very big level. Let's see if you do get that break. If you do get that break, be careful not to see a fake out like this. See where it looked like price was about to continue but reversed. You know, you want to see a nice close above here, which you haven't really had, you know, since September of 2019. So yeah, very important level here, and I think it's a chart that, you know, is definitely worth watching if you're into the crypto space, which you're probably already watching. But anyways, folks, that's about it. Again, I'm going to be posting videos more frequently, and be sure to visit the new website, and also check out and follow us on TradingView, where we will be putting up, or where I will be putting up nice setups that also develop for this week. All right, happy trading.